Hey guys. Hey Eric. Hey Garin. How's it going?
Great, great. Thank you again for the introduction, Eric. Greatly appreciated. Marshall, how are you doing?
Pretty good. Pretty good. No complaints. Had a nice weekend. A lot of interesting stuff happening in crypto right now. How about yourself?
I'm doing well, doing well. It's nice to celebrate mothers. So it was a good weekend indeed. And you're absolutely right about crypto. It's an exciting conversation. I'm always looking forward to diving into it. So thanks for your time.
Anytime. It's my pleasure. Yeah. Yeah. Great. A great timing. It's just the industry is in a really transformative stage right now.
Absolutely, absolutely. And I'll do a quick intro of myself and you so people have a little bit of understanding of who we are. My name is Garin Flowers once again. I'm a former TV news reporter where I reported a lot on things crypto, blockchain, and different innovative currencies and things happening in the world at an early stage. And I left that, and now I'm a national reporter for Yahoo News, where I still love talking about all things technology. So I'm really excited to talk with Marshall Hayner, who is a successful serial entrepreneur, experienced product focused CEO, and a prominent figure in the cryptocurrency and blockchain industries. He is the co-founder and chief executive officer of Metallicus Incorporated, where he leads strategic planning, fundraising, product development, regulatory compliance, and international expansion efforts. So I'm really excited to get into it. Let's just start at the base. How did you start this company? Where did your idea come from to lead your own effort?
Yeah. So I was very early person in cryptocurrency in Bitcoin before there were altcoins and other cryptos out there. And I saw the potential in 2009, right? I saw, wow, this could become what BitTorrent was to the early internet. And just, around that time, BitTorrent had become 80% of all web traffic. Now, today, you look at like Netflix and Spotify and Hulu and all the streaming, and that's kind of how our media is consumed. And I thought the same thing with money. Blockchain would be that decentralization, and eventually that blockchain technology would grow to kind of similarly to what happened to the media industry, right? With Netflix, it
Mhm.
would start to disintermediate the old system. You don't go to Blockbuster anymore. People aren't going out to the theater as much. The landscape is shifting. I like to use this analogy because they're two industries that are transformed by the internet, right? The media and entertainment world, and also banking. It's kind of an odd couple, but just looking at transformative things that happened. And I saw that there was the potential very early on in the first couple of years of cryptocurrency for there to be a banking solution, a PayPal of crypto, if you will. Because in the very beginning, that just didn't exist. For the first year, it was actually just people on a forum trading, bartering early Bitcoin. I saw a tweet the other day that somebody said they actually discovered the first Bitcoin purchase was not the pizza, was actually a JPEG for 500 BTC. I think that's also incorrect. There's a lot of other stuff that was bought. People were buying, send me a $50 Visa gift card through the mail just to prove that somebody could move some cash from point A to point B or something. This is pre Coinbase and pre Metallicus. And so Coinbase and Kraken and BitPay and some of the early crypto exchanges start to appear around 2012, 2013. That's when I got my start. I launched my first crypto app, QuickCoin, in 2013. It gained traction in 2014. I got involved with Stellar Project, with Dogecoin, just an early crypto guy. And I saw there was an early rhetoric that the banks were going to go away. And I could see that that's not true. Banking
Mhm.
has existed for over 1,000 years in different forms. It's not going anywhere. It's just going to evolve. And blockchain and decentralized ledger is what is going to power that revolution. And a few years ago, you could say maybe not. Now you just can't ignore it.
Yeah, I'm so glad you brought up banking because that was the first question I want. There was a second question I wanted to ask you. Blockchain technology has revolutionized banking by building a decentralized database of these digital unique assets. What is the problem with present day banking, and how does blockchain sort of address that?
Yeah, I think one of the issues is honesty, right? Transparency of the ledger. Um, in the fractional reserve banking system, and that it's what I guess what you call like the worst best system we've got, right? It's the system that we have, but there's honesty between the ledger, and that's something that we didn't have before. So pre-United States dollar, there were actually these things existing called wildcat dollars, where every state had their own individual currency. Banks had their own individual currency. Some were more solvent than others, but there was no transparency into anything. Enter the central banks, the Federal Reserve, the entrance of the United States dollar, and now there starts to be some uniformity, one system. But still, there's a lot of questions. Were a lot of questions about transparency, and I think the Fed is doing a great job. But this idea is like the currency of the internet. Bitcoin is the US dollar of the internet, if you will, right? A completely different experiment. And then everything that sprung out of that was some sort of derivative, that it's an experiment upon that. And the freedom of, in the spirit of, and freedom of FOSS, free and open source software, people said, hey, let's take that idea and let's improve upon it. And that's what open source does. And that's why blockchain is so interesting, because money was never open source before. It was completely, in a back room through policymakers that you elect that maybe represent your interest into the creation and destruction and economic policy of the dollar. Now, basically the policy around that was the Bitcoin miners. And then the Bitcoin miners got away from regular people. You couldn't mine Bitcoin on your computer anymore after a first year of Bitcoin. We moved away from CPU mining into GPU mining and specialized hardware. And eventually it started to become, as I predicted, nation states doing the mining. And it's funny to watch the evolution of Bitcoin and cryptocurrency from down with the banks. These countries, central banks can't have Bitcoin, to let's celebrate the central banks, or countries like, look at El Salvador, for example, buying Bitcoin. Let's celebrate that. So the mindset has completely changed. And then these derivatives are starting to become more and more geared towards different niches, whether it's banking, gaming, supply chain, or different niches of blockchain. And I believe in a multi-chain world. I think that, crypto is not going to expand, and this revolution won't just happen with purely Bitcoin or one currency or the other. There is no one guaranteed winner, but like the early internet, there will be champions, right? That over time rise to the top. And those are, in many cases, companies building around blockchains. And in some cases, those are also decentralized organizations, what they call DAOs, or decentralized autonomous organizations, which are connected networks of companies, again, building on blockchains. So I think that started, very simply when you look at like NFTs and JPEGs, and then think about the evolution of that technology into deeds of estate and realty and real world assets and different types of things that can be democratized through the blockchain. I think that ultimately, where systems are inefficient, blockchain like water will kind of flow in and fill in those gaps. So whether that's, voting, whether that's securitization, or tokenization of securities, you look at, how is it possible sometimes that a stock can trade way outside of its circulating supply of shares, right, on a stock market, because there wasn't that shared transparency between ledgers. And same thing with digital assets. Now you have these shared ledgers that can track digital assets that, beyond, looking at how it can revolutionize the securities world, you also have the digital gold like Bitcoin, or other assets, Dogecoin, Metal blockchain, Proton, Ethereum, you name it. There are thousands of assets, but probably only a few hundred that are really relevant.
Exactly.
I would say.
Exactly. And we're going to get to the specific cryptos in a little bit. So I'm glad you brought that up. With Metallicus, you're building the world's most customer-centric digital asset banking network and products that are for consumers and corporations. So talk to me a little bit about what those products are. How are you helping create this atmosphere for people to, utilize their banking network?
Yeah. So there's, in the United States, we're pretty far behind other nations in terms of banking and technology and things like that. If you're sending, for example, a SEPA transaction in Europe, it's no more than 30 minutes. In the United States, 2 to 3 business days, maybe more, maybe 5. And you're going to pay for it, whereas you're probably not going to pay for it like that in other countries. And when you look at blockchain, it's innovating at this rapid breakneck rate that's faster than banking. It's faster than fintech. I like to say 1 year in crypto is 10 years in the real world. So when we celebrate somebody's anniversary at Metallicus, your first year is your first decade, because like things are moving so fast, because we like to break things and we like to take different forms of open source and improve upon it and improve upon it. And that just didn't used to happen. So where is blockchain improving the consumer experience? Right now, you may hear things from the various talking heads in Washington that say blockchain's bad, crypto's bad. Crypto goes in cycles. So we're back to that cycle. I'd call it like late 2013, early 2014, when Mt. Gox exploded, Silk Road. Oh no, all these bad things. Well, now we've got FTX. There's issues brewing over at Binance. You have Luna exploded, Celsius, BlockFi, all of these things. We're back into that cycle of, does it actually fix the system, or is this an upgrade to the system? And that's really kind of like the evolution. You have a lot of bad players that just reinvented the old system. Celsius was an unregulated bank that wasn't monitored. But then when you look at other platforms like DeFi, true DeFi, like Proton Loan or MakerDAO or Compound, those survived the crypto lending crisis of 2022, right? And why did they? Because they were automated. They didn't have humans behind them making those decisions. So I think when you think about like DeFi, for example, that's a huge upgrade to the banking system. Look at, or the financial system, right? When you look at, and I think that banks over time will start to adapt some of these technologies as regulatory clarity and understanding starts to come in. It's just that this in the world of banking, it's kind of like, it's not really rewarded to innovate that quickly, right? It's kind of the opposite. But in the world of crypto, it is that. In fact, people are moving too fast sometimes, and you want to innovate responsibly. You don't want to create things that are going to cause problems. And I can look at like Terra Luna as an example of that. It seemed great, but then you really start to peek under the hood and you see, okay, this is just irresponsible, right? But then there are primitives and there are certain parts of blockchain that are going to completely change everything. Fast and feeless transactions. That's not really something that existed before. You may have heard people testify in Congress and say, well, does stablecoin really empower financial inclusion if I have to pay a $20 gas fee? Well, guess what? You don't have to do that anymore. You used to, but you don't. In the early V1 Ethereum, you did. With Proton blockchain, not only do you not have to pay the fee, it's going to be thousands of times faster, and you're going to be able to send it to @Garin instead of some pseudo-anonymous 0x address. And I'll be able to see the check mark next to it so I don't make a mistake and send it to the wrong address, which we see happen almost every day, right? So then, take another example. Proton, these are things that Metallicus is doing. There's so many things that other companies, individuals are out there doing, and I'll give another example. But Metallicus is about to release something called streaming vesting payments. So now in the future, you could get your salary on the blockchain and you could get paid by the minute. Even though you have you're used to getting your paycheck every 2 weeks through a payroll system, bi-weekly or monthly or whatever. Now you could get paid by the seconds. And that type of technology, no gas fees, payments by the second, compliance built into chain, that could disrupt a $20 billion industry overnight. The usurious payday lending industry.
What about taxes when you do something like that?
Yeah. And so, the other part about that too is we can start to automate all of that technology. So so the smart contract is setting aside all of your taxes and doing all of that stuff for you automatically. Right. And that's the vision. That's where we're going with this. And I think that's incredibly powerful, right? And you look at AI is another space of the internet and technology that's kind of growing like that, right? When Absolutely. It starts to automate things for you, when I can go and I can deposit dollars and borrow a stakeable crypto asset and then get a higher APY with a stakeable crypto asset without being exposed to it by just borrowing it against US dollars. And I'm used to getting paid, I don't know, nothing in my checking account with a bank. that's interesting, especially to the Generation Y, the younger generation, my generation, older generations, even my grandfather. It's something that I think all ages are starting to look at. And as the user experience starts to become more friendly, if you think of like the internet in 98, 99, Amazon 2000 versus Amazon in 23, whoa, right? Like that's what's going to happen to blockchain and cryptocurrency. And I'll give some other examples, open source examples outside of what we're building over with the Dogecoin Foundation, Radio Doge. Dogecoin transmitted offline over the AM airwaves, send and receive. You wouldn't even need an internet connection. You could be in the middle of nowhere and you could process a retail transaction. And you hear the Bank of International Settlements talking about this offline CBDC. Well, look, it's already being developed in the Bitcoin, Dogecoin, ecosystem. That's already happening. So I think that blockchain really is this incredible fire under the chair of banking and financial technology innovation that if you don't integrate with this and you don't research this and keep up with this, you'll be guaranteed left behind. And for the consumer, it's going to get more and more transparent, easier to use. When somebody used to send, $1,000 from San Francisco to Lagos, Nigeria, it might have taken 25% of the fee or 50% of the entire transaction by the time it arrives on the other side. I've talked to people and done a lot of research about remittances and seen how, as crazy as it seems today in today's age, that it's still a very usurious thing. And when blockchain and you think about like what it was like, I grew up in the 80s, early 90s as a kid. There was a time, I got the internet very early, but I still remember going to the library, right, as a kid. And you think about that experience, going to the library to check out books versus just opening your phone and Googling. I have a 1-year-old daughter and she knows how to swipe on the screen now. I think give it another year and she'll be doing things. It's incredible where this technology is going. You think about payments and banking. Another good example too is just like the telecom industry. You remember like 20, 30 years ago, if you wanted to call just another state, let alone another country, you've got these long distance charges and there's, and then as technology evolved, we don't pay anything to talk to anyone anywhere in the world at any time now. Yeah. But it's not like telecom went away. So that's where I think that this is going is the other thing I'll say too about blockchain and crypto in general is it's a litmus test for government corruption. If a country's government is banning crypto, then it's just corrupt. Yeah. Pretty simple. And that's something we have to really get right in the United States because, the United States is built on this concept of liberty and freedom and economic prosperity and the American dream. And we need to, and Silicon Valley, right, the leader in software technology in the world, we really need to preserve it here. When I look at what's happening in China or Russia or, even what's happening, Nigeria or Argentina or other countries where they're trying to prevent people to have access to cryptocurrency, that's a very corrupt thing. And you can see the people's reaction to that. So I think that it's the ultimate Pandora's box in terms of technology. Really two things, blockchain and artificial intelligence are kind of like these two things that right now that the world is realizing we can't put it back in the box. It's too late, but it will transform everything.
That's one thing I've noticed in my career as a journalist is government is always slow to pick up on technology. You see all the things they're doing with TikTok and, all these different apps they're trying to control. But, TikTok has been out for a long time. It's been out since like 2014, if you go back to the Musical.ly days before it changed to its name TikTok. So I know what you mean. Governments have been very slow to sort of jump on the blockchain and crypto train. But now that they're doing it, that makes them uncomfortable because they don't understand it and they don't have that regulatory authority because it's controlled by the people. You know what I mean? So I know that you're as blockchain continues to grow and continues to become more popular, it is becoming more regulated, and your company is leading the way and creating sort of a roadmap with helping with that regulatory environment. So explain that to me a little bit, how you all are helping with blockchain as it's becoming more centralized.
Yeah, well, I wouldn't say, as it's becoming centralized, I'd kind of I'd modify that statement to say more centralized entities are adapting decentralized technology. So
Yeah.
as more centralized entities start to embrace the culture of decentralization, you start to see more of these DAOs and networks and things like that. And really, at this point, stable coins are undeniable, right? They have over $100 billion of market capitalization. I mean, if you were to look at circulating USD supply, that's a fraction of the circulating USD supply in the United States. So with stable coins marching up towards that circulating USD capitalization, it's undeniable. And you couldn't even say in today's culture and today that you could just walk up to any merchant, on the block or person on the street and pay them with cryptocurrency. One and only like a few in 100 people would actually be like, oh yeah, I have metal pay, I have Coinbase, I have probably higher than that, but still the understanding and acceptance of that to use that so ubiquitously is still low. And I suspect what's going to happen as this technology gets easier and easier and better to use, take the streaming payments, for example, when everybody wants to be able to claim their paycheck like farming rewards and they don't have to pay anything to get it into their debit card instantly, that's when the mentality starts to shift. So, there are problems in terms of the technology on the regulatory and compliance side, on the user experience side that we're missing, right? So let's kind of dig into that, right? What are some of the first things? Well, the transaction fee of cryptocurrency is going to turn most people off,
Hmm.
even if it's low, even if it's a fraction of a penny. You tell me I have to get this thing that I don't know what it is to move a dollar. So when you look at something like Proton, that's really interesting because I can get a stable coin payment, I can get a Bitcoin payment, I could get a Dogecoin payment on Proton, and I wouldn't have to pay any gas fee to move it or to. So that's like the first kind of user experience. Then you start to dig deeper into it and you look at like, well, why have fintechs and banks not really adapted blockchain yet? Because
Hmm.
it's like building a startup inside of your startup, right?
Hmm.
Integrating blockchain, it's like, well, now you're a crypto wallet as well, or now you're partly a crypto custodian or exchange. So how do we disintermediate all of that extra legwork? And in particular, touching on the regulatory and compliance side, outside of user experience, if I'm going to send you an email, it's not 0x1 whatever, something crazy that I could look at and not easily remember in my head. It's Garin at yahoo.com or something like that, right? So that's, with Proton, that's the first part of it. And there are other blockchains doing human readable names starting to do that. We're just kind of an industry leader. But then you start to think about the Bank Secrecy Act and how traditional money is moved today. I can't receive money to my bank account from an unknown source. I can't just get wires from other countries in huge amounts and the bank is not concerned. They have to monitor for suspicious activity to prevent money laundering and other criminal activity. So how do you do that in the blockchain? Today, we use what they call blockchain analytics, like Chainalysis or CipherTrace, but really that's kind of like a best guessing technology. It's like saying over here, there's a sanctioned entity or a crypto mixer or a gambling website or something like that. But it's really
Hmm.
kind of like best guessing using the blockchain. We don't really know who's behind 0x whatever address. You can just kind of guess. So then into the future, when we start to use decentralized identity where we can attest a individual or business or government organization against an address where it's known, then you can start to automate compliance. Like we talked earlier about how you could automate tax preparation through smart contracts on the chain. You can also start to automate compliance around BSA. And furthermore, you can even have private blockchains with private transactions that are still compliant. You just look at kind of the early V1s where it's like no one can see into this address, for example, like Monero. And then what happens? Monero gets delisted off of every exchange because they don't know how to handle the blockchain analysis because it doesn't exist, right? So,
Hmm.
same thing with crypto and what we're building with Metal blockchain. The ability for banks to launch their own blockchains that are private ledgers while being connected to a public ledger give their users privacy, transparency, decentralized identity, and ultimately can create a better system for settlement between banks, between fintechs. The banking network, you don't have to use just one banking rails. In the future, you can have multiple different types of, you have Swift, you have ACH, you have SEPA, and most of these are kind of constrained by country. Metal blockchain seeks to kind of break that out and make a more global unified technology, sort of like Swift, but open in the spirit of FOSS, building something that's open that can talk to Bitcoin, talk to Dogecoin, talk to Ethereum, but also be in a safe environment too. And a big part of the Metal blockchain as well was creating a decentralized bridge that wasn't based on oracles. So the ability to move, for example, from a bank stablecoin to Bitcoin, for example, in a wrapped virtualized environment. And then, another bonus to that, getting the upside of what I call an L3. If Metal blockchain is at L0, a layer 0, and I'll start to explain this, layer 0 being a blockchain that can host blockchains, a layer 1 being a blockchain that can host tokens, a layer 2 being a scaling solution that's built on top of one of these layer 0s or layer 1s to help speed it up because it was kind of slow. So, and usually that involves a lot of centralization, where you have like in Lightning or something like that. And then at L3, where you just kind of almost move away from that old network and say, we're going to scale Dogecoin or we're going to scale Ethereum, but we're not going to use Ethereum's consensus to do it. We're going to use a completely new consensus, but it will maintain some version of chain state that links back to Ethereum. And that, I think, is kind of the future where things are going. Banks started with research in private ledgers that were just their own hyperledger, their own Corda spun up in their own backend, kind of connecting their network of banks. And now they're starting to realize, we do want to have Bitcoin in this world, but we also don't want some cybersecurity threat to drain out Bitcoin, and there's nothing we can do about it. And we don't know where people are depositing and withdrawing from and so forth. So the Metal blockchain is really seeking to create a network for banks and financial institutions that can transfer assets compliantly, but also gives them the ability to create their own stable coins and bank chains. And we really admire the work of Ava Labs and Eamon Gunsier and the team over there. Same thing with Dan Larimer and ENF and EOS. We looked at certain technologies and said, these are great, but we probably want to tweak them to be better built for banking. And then those other chains are going in different directions, like gaming or things like that. So I think that, banking might have been the unsexy topic like a year ago or 2 years ago. And now, as you see more and more regional banks collapse and you start to ask the questions of what's happening here and also what's wrong with the technology and what's wrong with the system, we're going to start to look at this as kind of a new trend in the crypto space. I think that people got bored for a moment and just were like, I just want a cartoon frog that goes up only, or I just want something like that. But we'll start to get more serious about it again soon.
Yeah, absolutely. And it's important too. It's important too. So, I know that you developed Facebook's first Bitcoin wallet. You also worked with Dogecoin and Stellar. So, I've read some articles that there's stability with the blockchain, but, people are uneasy when it comes to some of these cryptocurrencies, even the large ones, Bitcoin and Ethereum. So what do you foresee as the future of Bitcoin and Ethereum, with, Ethereum, for instance, being a lot of the exchange that people use for, the type of Bitcoin, the type of coin that they're using?
Yeah, Bitcoin was the first and has the first mover advantage, has the market capitalization. Ethereum was the first version of cryptocurrency with programmable smart contracts. And so I see that Bitcoin could definitely be number one for a long time, maybe forever. But I also, as a non-maximalist, believe that things could change rapidly and suddenly. And I can guarantee you there's one asset that guaranteed is going to be a higher market cap than Bitcoin when it launches. It's called the United States Central Bank Digital Currency, right? Guaranteed. If it launches in the next 2 years, it will be bigger than Bitcoin because it just is. Now, that doesn't mean that someday that Bitcoin couldn't be bigger. The unthinkable couldn't happen, but I'm not going to predict the future around things that I don't know. I'll make predictions around certain things that I can say this is obvious to me as a technologist, as a software builder. So where do I see Bitcoin going? Well, I think that Bitcoin started with the vision of payments, of non-state sponsored digital currency, and ultimately became kind of like the savings account. Because when it costs so much money to move, and it doesn't have really programmability, then you start to see these L2, layer 2, and layer 3 scaling solutions, right? And so one of the arguments was, and recently too in Bitcoin, is the concept of ordinals and programmability, on the Bitcoin blockchain. But it's really kind of a wonky way of doing it with like BRC20, where you're using JSON and you're rapidly inflating the size of the blockchain to the point that it's become really bloated and fees are very high. And then you have some maximalist, or I don't know what you would call them, arguing this is why we must use Lightning. See, everybody's going to use Lightning now. But then it didn't increase in terms of usage. So my big bet is on the layer 3, is on things like Metal blockchain, on the Avalanche, on the Polkadot, on the Cosmos, the layer zeros, building layer 3 scaling solutions. It just so happens that Metallicus is really focused on that. I'm a big Dogecoin fan and have been involved in Dogecoin from the very beginning. Recently joined the Dogecoin Foundation board of directors, and I've been helping out over there. And I see so much potential in layer 3 because it's not going to shake everything up. It's not going to say, okay, well, there's a new Bitcoin now, or there's a new Dogecoin now. And people have tried that, right? You've got Craig Wright running around screaming his Satoshi. He's not, by the way, but you have these things, and then you have, I think, newer technologies that people are skeptical of at first, but then at the end of the day, it really comes down to usage and how people use them. So like 95 or 93% of all DeFi, total value locked, is on Ethereum right now. That could change as well. And you could say, well, no, that'll never change. Let's use one that we know for sure, right? JP Morgan, the Onyx blockchain, formerly Quorum. When that launches, that there's going to be a lot of activity on that. Coinbase is betting on their base L2, right? And they think that a lot of activity is going to flow to that. And I can certainly see that too, because they're like one of the number one ramps, right, globally for cryptocurrency exchanging. So I think as the banks begin to enter, you're going to see the acceptance of layer 0 and layer 3 scaling solutions. I think that Bitcoin and Ethereum and Dogecoin are going to go to layer 3. My big bet is layer 3 over layer 2. I think layer 2 is interesting, but if you look at kind of what has happened so far, it really hasn't stuck. It really is a dogmatic approach of saying like, it has to be on this chain. But at the end of the day, it doesn't. All that matters are the people that are using it, how they're using it, and if they're extracting value from it, right? And so I think into the future, layer 3 will be that band-aid, and may even serve as a way that into the future, some of these blockchains ultimately move and migrate onto that. If you look at like something like Tether, it's interesting. Tether, the first stable coin, did not start as an ERC20. It actually started as this thing on something called Omni, aka Mastercoin. It was a layer 2 scaling solution for Bitcoin. And some exchanges still have Omni USDT deposit capability, just in case you still have some and they can, convert it for you. Quickly, it moved over to ERC20. They're on Tron. You look at USDC, it's on all the most popular top 20 blockchain networks, from, Polygon to Solana, etc. And so I think that history has shown that L3 is where it goes, right? Bitcoin DeFi went on to Ethereum as wrapped BTC, WBTC, not on Bitcoin L2, right? So I think that we're going to see the merge of L3, layer 3 solutions and banking. Every bank will have its own blockchain. Every major company will have its own blockchain, and they'll be connected. And they probably won't be connected via oracles, because the oracles are just this massive security threat that at this point, over $5 billion with a B dollars have been lost. Enough to fund a small war has been lost to Oracle-based bridge attacks. It's the most hacks in all of crypto of all time in crypto has been oracles. So I see the cryptocurrency community and kind of world reacting to that eventually and saying, okay, we can't do these oracle things because they're kind of like the point of weakness. You could build a great system, and one oracle collapsing can cause a cascade of collapse in DeFi. And we've seen this before in various bridge hacks, wormhole bridge hack, and different things like that. And then you've also seen, for example, like how like Luna collapsing affected the Cosmos ecosystem. It just completely rocked Osmosis and the whole DeFi ecosystem in Cosmos when it collapsed. So, a blockchain and its network is only as strong as its weakest link. We need to have bridges that are not reliant on smart contracts, rather their capability to bridge between chains is sub-chains, and the bridging is done through the blockchain itself and not a smart contract. I think that's where it's going. And then also people are going to want to hold crypto inside the bank at some point, to custody inside the bank. Because if you think about it, into the future, as it becomes more of a popular investment asset class like Bitcoin, you wouldn't necessarily want to have it written down onto your mattress or your safe at home or something like that. You probably want to, have it inside the bank, or using some multi-signature technology that has the bank as a signatory and your lawyer or something like that. But that technology will certainly evolve. And I think that banking's role in cryptocurrency will become very important in the future. It's just very early right now.
Okay. And what advantage is your blockchain network and products that you put out into the world? How is it better than other technologies?
Yeah, so I would say, maybe, I don't like to be competitive in the sense that's like, I'm the best and, everything else sucks or whatever. Different, I would describe it, better in certain ways for certain things. Metal blockchain better for banking and for fintech in the crypto world than other blockchains. And why? Well, because Metallicus has, as a regulated entity, has experience with fiat payments. We're executives from Metallicus, myself and the CFO, Arena Birkin, are forming a bank, First Block Bank and Trust, under FBBT Holdings. And so we have experience in the banking, in the payments world. We know what's missing and what's needed. We need the reg tech, or the regulatory technology, built into the chain. So standards at the protocol level, at the chain level, are important. One of the big things people asked me since we've launched Metal Blockchain, we've started to get more noticed over the past month by Avalanche community, other communities. Well, why not just build it on Avalanche? Well, there are different, fundamentally different things. For example, Metal Blockchain is over 80% parameterized, where Avalanche is 51%, like Bitcoin. It's more of kind of like a different ethos. The bank wants more certainty in terms of the parameterization. They want to know that it doesn't, you're going to have to really completely take over the entire network to have that control. And so Metal Blockchain just makes that impossible. I'm not saying that it's possible at 51%, but it's a lot higher probability than 81%, just by the rule of numbers. And then also, when you look at like the technology behind it, web authentication, we've been a big believer in the capability to do transactions seamlessly. So the idea of having to like install a plugin in your browser that connects to your wallet, I come from the old school internet world where plugins are dangerous. So the idea that you would put a plugin to handle your money, it sounds silly. And then it was, because look at all this money being stolen. I think the founder of my Ether wallet, my crypto, Taylor, I forgot her last name. She's a brilliant engineer. She recently launched a website where she tracks daily the amount of money siphoned out of MetaMask from pig butchering and phishing scams and things like that. And it's into the billions, again, with a B. And so, MetaMask and Chrome plugins and plugins for your wallet, that's a bad experience. Crypto has moved on to, use hardware wallets. But guess what? Your iPhone, your Android phone, and your MacBook Pro is a hardware wallet. It has what they call a secure enclave chip in it, which does that only is used for cryptographic signing. And that's kind of a newer thing over the past few years. And so Metallicus is embracing the standard of web authentication, which essentially turns your phone, your computer, into a hardware wallet. So it turns out you don't even need this doohickey dongle to carry around when you're signing transactions. And what's easier than a face or touch ID, right? And the capability also to change your private keys. That was a concept that just didn't exist before in crypto until EOS and Antelope. And so, we're taking a lot of this technology and we're modifying. We took the EOS code base, Antelope code base, and we modified that to become more resource efficient. And then we're in the process of rewriting the Antelope code base to run on top of Metal blockchain, which is a fork of Avalanche under the Snow protocols. And it's infinitely faster, right? So previously 500 milliseconds to transact or execute a transaction. Now Proton is doing it under 50 milliseconds on what we call the A chain. And that, I think, is going to be the fastest blockchain in the world when it releases. Like, you press send and it's like, it's in the wall. It almost feels like a quantum experience because it just doesn't. And so there's no lag. And so and it's also scalable, and you have this ability to connect without the Oracle-based bridges. Some other things that we're doing is building the decentralized identity standard. And also we're looking at, we're talking to bank partners. We're talking to, central banks and different fintechs about how they can, how blockchain can work with the traditional system, with the traditional financial system. And it's really incredible when you think about, in the future, there will guaranteed be a Robinhood blockchain. There will guaranteed be a Google blockchain. And there needs to be some place for them to communicate. And so I think that crypto is starting to realize that. Was a big fundraise with a company called Layer Zero Labs that's trying to do it through oracles, essentially. We just decided to take a different route, and having that experience in actually moving fiat currencies, US dollars and euros and other fiat currencies, and being regulated to do it, we know what needs to be built. I think a lot of times in the past with crypto, things were built in a vacuum of kind of crypto bubble, and people were not looking at, okay, how does this fit into the bank? And then you have the private ledger, like the Hyperledger and Corda, same thing. They're in the banking bubble, not looking at the public network. So I think that Metallicus is interesting in that we firmly have our foot in public crypto networks and banking and private ledger. And I don't think there's other teams building that kind of have that unique footing where we understand where all three converge. So really, the technology we're building around it is to integrate with the modern day financial system, and also to empower these networks to be able to grow and to connect with each other in a way that they couldn't before.
Absolutely. So for the everyday average person who wants to utilize this technology, like you said, maybe wants to send money to a loved one, in another country, or just wants to get on it and just learn more about blockchain and just be able to utilize this technology, because like you said, it's going to be in the future, it's going to be something that we all wish that we were on earlier. If we're not, what would you say to that person who's trying to utilize it?
Yeah. So I would say that people get really caught up in the chase for wealth. When they discover cryptocurrency, they look at it. The first thing that attracts people's attention is, I heard Bitcoin was at $1 at one point, and now it's $29,000, $26,000, whatever, right? So people think about that, and that's just the reality. Is that's one thing that catches people's attention. But what I always tell people is that, yes, that's interesting, but where you're going to find the most wealth and opportunity is through learning and through the education. Get involved in crypto, even if just a hobby, and you just start reading about it. Learning how to deploy your first smart contract, learning how to play with this stuff, how to generate your private and public keys and back up your keys. And you start at the most basic, read Andreas Antonopoulos, Mastering Bitcoin 101, start there. And you start to build out the technical understandings, but then you also start to ask these questions about, questions that you were probably never taught in school or college, unless you are a master's of economics or something like that. Chances are you didn't ask a lot of these questions. Where does money come from? How is it created? Who regulates that? And how does it expand and constrict? And how does it affect the economy? That's a journey that most crypto people end up taking because they start asking these questions, and that knowledge becomes infinitely valuable for so many reasons. You start to understand how to better handle your finances. When you start to look at the macro economy of money, it starts to put things into perspective. And then when you start to actually code or really go deeper on the technology side of blockchain, you could really build yourself a career in an industry that it's growing so rapidly. It's an incredible place to be. And so what I always tell people is to just learn. Don't worry about buying this coin or buying that coin. Maybe don't buy any coins to begin with. Just show up, get onto Telegram, start asking questions. Get onto Reddit, start asking questions. Get your first Satoshi, get your first Doge, get your first Proton or Metal, and just start simply and start learning about it, because that education is going to turn into something really big. And then if you do start buying a lot of crypto or trading crypto, at least you're coming in with a lot of knowledge, and you won't make the mistake that a lot of early people did, where they just kind of like, oh, someone told me to do this, so I put every dollar I had into this thing. That's a bad idea, right? You want to use something like MetalPay and set up recurring buys. Don't buy the Bitcoin all at once. Buy $20 every day for a period of time, so you have a cost average. Same thing for exiting, right? And you start to learn about cryptocurrency and money, and you start to make these decisions, and you start to also it just unlocks so much potential. I've watched so many people, whether they've entered the industry and took jobs in the industry, or just have come back to me 5 years later, 10 years later, and said, wow, you told me to look at Ethereum and smart contracts, and now I went from this lower level Google engineer to I'm a code auditor getting paid six figures. It's amazing. Or just I never knew how money worked, and now my mind is racing around these thoughts, and I've got a new job at the bank and blah blah blah. Or people have told me they've started blogs and YouTube channels. Hopefully not the coin shilling kind. I think that I'm just joking, but like the opportunity really is around the education. And I think that as people get more and more educated, the cryptocurrency industry advances, and also our society advances in terms of just that understanding. I predict in 20 years from now, 30 years from now, the amount of young people with credit card debt and things like that will be infinitely lower, because they'll be able to make different types of decisions that when I was a freshman in college, I didn't have anyone lecturing me about the future of money or anything, but now it's everywhere. So
that's a great point. Financial literacy is not something that is top of mind for institutions. It should be in K through 12, but even colleges don't make it a general education thing to teach how to care for your money. So hopefully the future of money through technology will help people better take care of their finances. So talk to me a little bit about the Metal Foundation. You care about social causes through cryptocurrency. So talk to me a little bit about the good you're doing for the community with that.
yeah, so we at Metallicus at different times as a company has really devoted, thinking about having strong, embodying strong, how we embody strong values. How do we make an impact beyond just the for-profit activities we're doing? And so we started the Metal Foundation in 2017 when Metal DAO launched, and that's continued with the evolution of the Metal blockchain. We've done some really cool stuff. We raised we donated $100,000 of cryptocurrency to the first bank in Philadelphia, which is a museum. It was actually the first bank in the United States, and to help restore that. Many years ago, we helped fundraise about $1 million for ocean conservation with Richard Branson through cryptocurrency. Me myself, also just in like philanthropic stuff, I've been involved with the Dogecoin community way back when we built some wells in Africa. We sent the Jamaican bobsled team to the Winter Olympics. And more recently, we have some other cool things we're planning inside the Dogecoin Foundation. Metal Foundation, same thing. We really want young people to start becoming more economically empowered and financially literate. So we have some other stuff that we're doing. We've also sponsored some programs here in California around fostering education and things like that. So really, focus around financial literacy and education. Sometimes it deviates and it's something weird or wacky, whether it's something I'm doing with the Dogecoin Foundation or it's just something that's maybe personal to some executives at Metallicus. But yeah, in general, I think that cryptocurrency is one of these incredibly powerful tools, and it can either be used for great good or great evil. And we saw last year what great evil looks like. It's the greed, it's the lying, it's the the Celsiuses, the BlockFis, all these things that exploded. And then we can see what the potential good is, right? Where for example, like some of the things that I just mentioned, that is incredible. That idea is incredible. And the original vision of MetalDAO and something we called POP, proof of process payment, was that people could earn MetalDAO token they don't have to become a crypto miner. So from 2018 to 2021, for 3 years, if you were using the Metal ecosystem, you were just earning Metal token. And there were people that didn't even own really any crypto that just switched from Venmo to MetalPay, and then paid off their college loans or a car. That doesn't always happen, but that education of kind of like, if I started playing with money, if I started experimenting, I might be able to do something really incredible. That's really what we're focused on, and we plan on doing many more philanthropic stuff at the Metal Foundation, and also building that out and bringing in other members to help realize that vision, because we think it's really important that cryptocurrency over the years will continue to get a bad rap in certain places when you have bad actors come in, and it's few and far between we talk about all the good stuff that's happening. So that's something that I really want to focus on over the next few years, and also the company at Metallicus is really we really believe in.
Yeah, thank you for sharing all that. It was some really cool things that you've been involved in that I didn't even know. I think that's incredible to help out in so many different ways. You know what I mean? From athletics to financial literacy to helping people with projects. I think that's incredible. And so, as we start to wrap up the conversation, what is something in banking and metal blockchain that people aren't talking about? What's something that's being missed that is sort of under the radar?
Yeah, so I think that, what a lot of people are not realizing is that the banks are going to integrate blockchain technology. That's an inevitability. We saw the OCC a few years ago write several interpretive letters talking about how banks could be able to issue stable coins, could run their own nodes. And then I think after the explosions of last year, there was a little bit of walking back against that, whereas a little bit, there was some nervousness around that because of these bad actors. But ultimately, banks will be integrating this technology. Stable coins are going to grow to be a multi-trillion-dollar market cap. You will have public and private versions of fiat currency. So, the US digital dollar. But then I also think you'll still have USDC, just like we have the United States Postal Service and we have FedEx, private and public services. These are going to expand. And so I think those that are thinking about banking and blockchain, or were wondering if this is something that's really happening, if you're a new developer coming into space or even older developer, you need to be thinking about who are your bank partners? How is that going to expand? And also especially smaller regional banks, as the technology grows and, the smaller banks are looking kind of getting shut out from what they call too big to fail banks, the JP Morgans, who are actually, and Bank of America, who has more blockchain patents than anyone in the world.
Oh, wow.
that small and regional banks are going to adapt this technology. They're going to adopt things like Metal blockchain, and they're going to grow their AUM and their customer experience. There's going to be a renaissance in banking over the next 5 to 10 years. It's going to be absolutely incredible. And I think that, when you look at kind of like the banking apps today and the way things are used today, not much has changed in 10 years, right? Really not much has changed to your banking apps experience. That's going to change. And it began with kind of the neobanks, the MetalPay, the Cash App, the Venmo. And you're really, over the past 5 years, you've really seen those grow. I remember when I was pitching MetalPay in 2016 and said, I'm going to be the PayPal for crypto, and PayPal will even add crypto. You'll see. And the first couple angel investors I pitched to were like, neither of those things are ever going to happen, but they did. And not only did they happen, but it's actually, I believe, Venmo's #1 revenue generating category right now is cryptocurrencies.
Wow.
So, you think about that and you think about the younger generation, how this is all going to play together. If you're in this space, you need to be looking at the intersection of banking and crypto. And you need to be thinking about how your company, if you are integrating crypto, if you are building on blockchain, will take ownership of having its own blockchain or building on top of other banking networks. Because as this technology expands, initially it was choked, what I would call choked through the fiat on-ramps, trying to get in and out. You have to actually pay money to get dollars, to get stablecoin. Now the conversion is relatively feeless and instant. And in the future, you won't even be converting anything. You'll be able to deposit and withdraw stablecoin right to your bank. So, to all the builders in the space, I would challenge you to look at Metal Blockchain, think about Layer 0, think about fiat ramps. And if you really want to future-proof yourself, start integrating this tech now and making sure that you have good banking partners and good fiat ramp connections. Because in the future, if you haven't thought about these things, you won't be able to survive. And at the rate that crypto moves, where 1 day equals 10 days, you got to move. You got to move very quickly. So it's a space to watch.
That's a great way to wrap around the conversation. Going back to that, 1 day equals 10 days in crypto. So yeah, I'm really glad you added that. It's technology and innovation that's moving forward and is going to become status quo at some point. And so learn now, do your research, buy your books and whatever you need to do to get aboard. So ignorance isn't an excuse in this, because a lot of people are going to say they don't know what it means or what the blockchain is or what this, what that is. But if you really want to innovate, you really want to be, not even ahead of the game at this point, because, it's already moving, do your research. Any other last words you want to say before we wrap up the conversation?
Yeah, for everyone out there in crypto, we're all in this together. Let's not be tribal. Let's not fight, Bitcoin versus Ethereum, this, that, or the other. The enemy are the people that are trying to stop blockchain and crypto, and we need to start aligning together more as a community. So for all those people listening to this, know that the enemy is not the rival coin or blockchain or whatever. It's those entities and people that are trying to stop the progression of blockchain.
Absolutely. Thank you for adding that, Marshall. All right. Well, this was a great conversation. I think that it's something we'll definitely continue on, and I'm glad I got to be a part of it. I really appreciate all the things that you shared, and you dropped a lot of knowledge today. And I hope that everyone who came to the room learned a lot. Thank you all for sticking around. It seemed like there was a pretty good engagement with folks. Putting a little emoji responses. I was paying attention to that, so that was good. And yeah, Marshall, this was a great conversation. I learned a lot myself, so I really appreciate your time.
Thanks for having me on, and this was really great. Let's do it again sometime soon.
Yeah, I would love that. I want to definitely keep the conversation going. So thank you, Marshall. And
Awesome. Cheers.
for people who want to follow you or follow your company, what's some information you have for them?
Yeah, so go to Metallicus.com. We're on Twitter at We Are Metallicus, at Metal Blockchain, at Proton XPR. You can find me on Twitter, just my full name, at Marshall Hayner. Yeah, check us out. We're on every platform, Reddit, Facebook. So just go to Metallicus.com and you can find us.
Perfect. All right. Thank you so much.
Thank you.